Federal stimulus has ignited a boom in mortgage refinancing, benefiting both homeowners and banks. And the good times could continue as the government steps up its support of the broad housing market. The proof will be in the profits. On Friday, Wells Fargo and J.P. Morgan Chase, the top two mortgage lenders in the country, are scheduled to report quarterly earnings. Their results, and the wave of other bank reports that follow, will offer clues as to whether the current mortgage boom is sustainable or set to fizzle. We expect. Thank you for trying verbose. This recording will go away once the product has been purchased. Mortgage revenue to continue to be elevated in the third quarter and possibly into next year, said Jason Goldberg, a banking analyst at Barclays. In the third quarter, banks probably originated as much as $450 billion of home loans, according to estimates by Inside Mortgage Finance, a publication that tracks the industry. That figure, which includes both refinances of existing mortgages and new loans to purchase a house, would be a considerable jump from the previous period. In the second quarter, banks originated $405 billion, with 68% as a refinancings. Since the financial crisis. Thank you for trying verbose. This recording will go away once the product has been purchased. Of 2008, some large banks have found themselves well positioned to make money when the mortgage market gets hot. It comes down to the advantageous role banks play as the middlemen in the mortgage machine. Instead of holding on to new mortgages that earn interest over a number of years, banks sell nearly all of them to investors after packaging them into bonds. The federal government, through entities like Fannie Mae, attaches a guarantee of repayment on the loans, making the bonds even more attractive to the investors. When the banks sell the mortgages. Thank you for trying verbose. This recording will go away once the product has been purchased. As bonds, they do so at a profit. This markup has gotten even bigger after the recent moves by the Federal Reserve and the Treasury Department to help the housing sector. In September, the Federal announced plans to buy large amounts of mortgage-backed bonds. The proposal has driven the price of such securities higher, allowing banks to earn an even bigger financial gain when they sell their mortgages into the market. A Treasury program makes it easier for homeowners who are underwater, meaning their properties are worth less than their loans, to refinance. This thank you for trying verbose. This recording will go away once the product has been purchased. Initiative, coupled with the ultra-low interest rates, has generated a flurry of refinancing activity, producing a windfall for banks. Some analysts expect banks to keep churning out profits on mortgages. They think it unlikely that there will be a let-up in refinancing anytime soon, given that rates are expected to stay low for a while. The average rate on a 30-year fixed-rate mortgage has dropped to 3.36%, from 3.95% at the end of 2011, according to Freddie Mac figures. I estimate that close to half of mortgages haven't. Thank you for trying verbose. This recording will go away once the product has been purchased. Economic incentive to refinance, said Paul Miller, a banking analyst at PR Capital Markets. Mr. Miller believes the steady stream of refinancings will last for multiple quarters. Some banks are reluctant to expand their mortgage operations, meaning the market can handle only a limited volume of loans at a time. These banks fear that entities like Fannie Mae, which guarantee the loans, have become a lot more demanding when asking